A lot of the brain power, a lot of the resources are not invested into the right things. That's also why I'm personally very bearish on a lot of altcoins. They're just focused on that someone is buying their crap.
The fact that this can still happen in DeFi is a massive setback with regards to trust and credibility and institutional adoption.
How can this economy sustain itself? 80-90% of this consumer sector is spent for useless BS. More than half of all white-collar jobs in first world countries are just adult daycare.
I strongly disagree on that. I strongly disagree on that. I think there's still too much money in the crypto market for like proper growth that's anchored to real demand drivers, to real innovation.
Everyone knows I hate KOLs, but like some big names and they're all shilling casinos. Even Gainsey shills casinos. And I'm like, what's going on here? Like, this is weird. It shouldn't be normalized.
It is insane to me how people, especially in our generation, take the working of this machine for granted. It is absolutely insane to me. Every single day. GM, welcome back to, I think it's number 13 of the Odyssey Roundtables and episode 47 of a podcast already. How are you guys doing? Any exposure to Balancer?
No, luckily not. Not doing well because of that. And yeah, just generally looking forward to enter the last 2 months of 2025. It's so surreal to say that, because like February, March feels like 2 weeks ago and now the year's almost over again. I don't know, maybe it's because we're getting older and everything feels like so much faster, but 2025 so far felt like this. I don't know about you guys.
For those who've missed it, so Balancer apparently got exploited overnight, the version 2 of its smart contract. So it's not the V1 that has been around for 6 years. Probably some re-entrancy attack. Maybe Owner, you can explain that a little better. But right now it seems as if the total damage amounts to around 100 million. Most of it comes from ETH and ETH derivatives that got exploited there. And as of now, there's no official tweet from the Balancer team that the exploit has been patched or fixed. And there have been some Balancer forks, amongst them, I think it's Bex on Barret Chain. And Barret Chain got halted by the validators this morning. So yeah, decentralization at its work, at its best. Of course, it's very easy to make fun of it, though I think that if there is an obvious path to securing user funds, I think it will be more and more normalized to hold chains in the future, especially if it is something newer and with less validators than, let's say, ETH or BTC. I could very rarely imagine a scenario where either one of those would get halted. But with these newer ones, especially when it comes to EVM L2s, I think that will be more accepted going forward. But yeah, curious to hear your guys' takes.
I don't have any specifics as per technicalities, but I think in general, the craziest thing is Balancer is not a recent protocol. Balancer is a DeFi dinosaur, which has been around for multiple years. I don't know how many years, but it's, 4 or 5 years or whatever, and has been audited multiple times. The fact that this can still happen in DeFi is a massive setback with regards to trust and credibility and institutional adoption. Like, imagine, like, if the core protocols such as Uniswap, such as Aave, I would say Balancer was in that category, are not safe. I mean, then, like, what's the point of using anything? Anything other than that is more recent and probably more prone to attacks. So I think it's a massive setback. Yeah, the amount isn't huge, but the market already wasn't in a good condition. So yeah, it's pretty bad right now. But yeah, I'm not exposed.
Yeah, I think especially since there have not been any major exploits on a protocol level this year, especially relative to 2022, 2023. The biggest one this year was the Bybit hack, and that was a front end, like switching the front end and address thing. So that was more on an exchange level, but not anything that impacted our truly fascinating decentralization tech. But yeah, moving on with some other news. or developments. Speaking of the Barret Chain halt, there has been a Barret Chain DAT, and I think Yuri, you wanted to comment on that a little bit.
Yes. So there have been discussions about that, to build a new investment vehicle to accelerate like a kind of a flywheel effect for Bera and the Berachain ecosystem by launching a so-called DAT, which was initiated by Green Lane, I believe. Correct me if I'm wrong, please, but pretty sure it was Green Lane. Was discussed and announced around Token 2049 and the Korea Blockchain Week, and it just popped up now for me. And that's also why I wanted to talk about it for a little bit, because you see, Berachain just got basically one of his first bigger hits, something that they are not responsible for. But I mean, we have seen it also with FMOS, right? In the past, there was like a Nomad, the Nomad hack, and completely drained the FMOS ecosystem. And this was like something that was completely out of the control of the FMOS team, yet FMOS suffered from that significantly. And I just found it so fascinating. So Berachain isn't even a year old, or like at least not at mainnet for a year old. And I just see it left and right how these super immature ecosystems try to launch a DAT and talk about how to foster the ecosystem with like investment flywheel, and that they receive demand from Wall Street or whatever. I'm super skeptic of that. And we talked about it before the show. Yes, it makes sense. And it's like also kind of an initiative to stay relevant and make sure that the asset itself stays up. I get that. But for me, it really feels like that a lot of the brain power, a lot of the resources are not properly like not invested into the right things, because people don't think about growth right now in many of these altcoin areas. That's also why I'm personally very bearish on a lot of altcoins. They're just focused on that someone is buying their crap, so to say. That's what they're focused on, and ecosystem growth and all of these things are completely irrelevant. And this is like something that's a little bit worrying, I believe, for the broader ecosystem.
I agree with your overall take. It's kind of a last gasp for relevance and not completely dying alongside your coin. I think that most of these teams don't have a lot of alternatives right now. Basically, we have not seen any net user inflow since mid 2022. Arguably, with the top of the 2021 cycle in November 4 years ago, and Luna collapsing in 2022, like on-chain participation in terms of like retail genuinely being excited for these use cases has been on a down-only trip. If you look at DeFi farming right now, anybody who has had any long-term time preference or any long-term view on anything, any long-term conviction, they all lost out this cycle. Like if I look at my DeFi positions that I accumulated from the beginning of this year, they're all in the red, like unanimously. I think there's like one or two meme coins where I'm still in the green, but these were very low position sizes, and it was just because I got like somewhat early. But all the other stuff, which are genuinely good projects, if you look at Maple's Syrup or Ifina, they've been doing an excellent job on the BD growth expansion side, integrated into a ton of things. Still, their token is not picking up well, and it's getting continued sell pressure from early investor unlocks, or in the case of some of the POS tokens, obviously the staking rewards. I think TIA is the most prominent example there. So yeah, I don't really know how to fix that. I also don't think that the DATs, which follow a very simple buy and hold strategy, have any future, at least not the ones who are spinning up right now. The large ones that are already existing, most of them arguably have been able to like do these financial engineering shenanigans to finance themselves for the years going forward. And unless the asset prices of their underlying totally plunges and stays in the gutter for years, which in the case of BTC and ETH DATs and also Solana DATs is not that likely to happen. I think most of them will be fine, but the entire longer tail, I really don't see any future there. And I think it's rational, or let's say efficient, if they trade at a discount to NAV going forward, because ETFs are getting more and more accessible. If you are a TradFi deployer, you can deploy capital into on-chain finance via curators, vault providers, etc. That is not an impossibility. I don't see a reason to accumulate these DATs unless you have a huge shift and suddenly a huge appetite for longer tail risk assets again. Then it may make sense to speculate on the NAV premium to increase and buy the shares of them. But other than that, I don't see a very positive path forward for the long tail of them.
No, not at all. Also, if you look at, I mean, just so that the people also understand that what kind of companies become DATs. So usually the life cycle is that a company that is publicly listed and is struggling is doing this pivot. So it's like basically both sides are like trying to do basically trying to take advantage of the last resort. The company is like pivoting, saying, hey, we're doing something completely different now. Maybe crypto bros will pump our valuations.
I would add some brief
other
context
side.
to that, because usually it's not coming, like the shift into a DAT is rarely coming from the underlying company. It's usually the team that wants to set up a DAT picking a company that they want to acquire. So like logically they acquire one which is usually operationally not doing a lot anymore. So like, of course there might be a little bit of adverse selection, but like
obviously you need to convince the board.
As
that's how public companies work, right? You need to still go in, convince the board, and have like these conversations. A lot of people say, okay, whatever.
Well, you can do a hostile takeover. If it's trading at a very low price, you can just buy up the shares that are publicly traded. You can kick out the old management and turn it into a DAT. It's not that complicated.
Yeah, but for that, they still have like a bigger market cap. And so usually it works like this.
I'm getting alpha in real time. And it's a controversial one. Apparently, the balancer hack was vibe coded. So
another Birkin bag for Kim Jong-un.
Some people analyzed the console logs, or like, you know, what's been logged in production. And normally it's common practice to remove console logs in production. It's just good practice. You don't do that. It's mostly for debugging. And here there were console logs, and the logs look exactly like an LLM. It would basically help you understand what's happening, step 1, step 2 type. So it's just rumors, but it would be wild. It would be wild.
On that note, do you think it could be a white hat exploit, or do you think that's very unlikely?
I mean, first of all, yeah, I think it could be. Given that there hasn't been any communication, it's super weird. Maybe they're like negotiating behind the scenes. But if it's not a white hack, and if it's LLM based, this could set precedent for LLM providers actually exposing the hacker. So there's a couple different scenarios here. If a hosted LLM was used, like ChatGPT or Claude, then those providers know who penetration tested this before, coincidentally. If it's a locally ran LLM with proper GPUs and whatnot, I mean, yeah, then it's not possible. But I don't know. White hack, 70, 80 million. Unlikely. Doesn't smell like white hat.
Let's see. I think if it is a white hat hack, I would have a guess who could be behind it. Like it would be a crazy long tail outcome if he actually turns out to be, but it would be pretty hilarious.
Okay, who do you think? Now you have to say.
I really can't say it on the podcast, but yeah, I have like one person in mind who would fit right into that whole like storyline. But yeah, it would be pretty funny. I don't think he's behind it, because I think we should assume that it is not a white hack.
Max just DM'd me, Jacob Gedikian. Just kidding. All right.
Yeah. Speaking of him, like, have you guys followed along Cosmoverse at all?
No, not
I
really.
just saw empty seats. I don't know. I don't have any insights.
I guess nobody knows because nobody attended. But on another note, the Solana ETFs went live.
Can we just to for the sake of wrap up, like just wrap up that the Barret Chain chapter real quick with the DATs. So we ended with that you could just take over. I think in most of the scenarios it's really like an interest coming from both sides. But my last 2 cents to all of that, because it's not only Berachain. I think there's also like an IP for Story Protocol. There's a similar one for Injective. Like all of these chains, I just hope that it calms down a little bit, because all of that is like I don't know if it's like so healthy for the industry to launch this. Sorry to say it, but I think most of them are like crappy, super crappy
I
products.
fully agree. I think I think it was either at Token or at DAS London. I think it was at DAS London, where I spoke to the Injective team because they had a booth there. And I was like, hey, I used to be pretty interested in your ecosystem 2 years ago, followed along quite a bit, haven't caught up in a while. Like, what's happening? And basically, the only catalyst they told me about was a DAT coming up. It's like, I'm asking them, hey, what is going on in your ecosystem growth? And the only answer is, well, there's some hostile or maybe like whatever takeover TradFi company that is going to buy our token. I mean, what kind of adoption ecosystem growth is that? I mean, are you like, no wonder all of these things are down 80% and more. And frankly, they should reprice even lower.
And just also to end this, you also need a lot of capital in order for a DAT to have like a significant impact. Berachain, for example, and Green Lane, they are collecting $110 million in the market for that. They want to buy $110 million worth of Bera. Like, I'm just super curious where they will find it. Like,
Well,
where does this money come from?
I think the liquidity necessary to push up the price heavily depends on who they are buying it from. Most of these DATs, especially on the longer tail, they don't buy it open market. Because if you look at
Sure.
Injective and the liquidity available for Injective, if you were to like yank $20 million or however large that DAT is straight into the market and just market buy 20 million of INJ, then yeah, you would have a very positive price impact. Same with 50 or 110 million for Bera tokens. It's not, I mean, the Bera liquidity is by far not as deep as ETH or BTC. But the issue is that mostly these DATs acquire a large percentage of their token holdings either from other early investors who sell OTC or directly from the foundation. So the net buying pressure on the open market is very muted. I think there were some analytics out a few weeks or a few months ago when the hyperliquid treasury first came up, and I think also some of the ETH DATs, and the common kind of distribution there was usually that you had sort of a like 2/3 to 1/3 split between buying from early investors and foundations versus buying on the open market. But I think especially for these kind of down only tokens like Bera or INJ, I could very well imagine, and I have not verified this information, but I could very well imagine that almost all the volume is coming from OTC sales, and the actual buying pressure on the open market is very limited. Because otherwise, we should have seen it in the price at least a bit.
100% agree.
But
Yeah,
speaking
and
of
just one thing, INJ really went down almost 50% in the past 4 weeks. That's insane.
Jesus. Yeah,
But
it had an insane run in, I think, early 2024.
yeah,
But
and also before.
truly easier times. I don't think that I have it on my. Oh yeah, I still have it on my watch list. Yeah, this thing is down only. Jesus. But yeah, speaking of institutional flows, so the Solana ETF launched a few days ago, and the flows have been all right. I mean, at least they have been positive, but they have not been overwhelming. And also, if you look at the Solana chart, it does not look that different to all the other charts out there of the majors. It's also at the range low right now between kind of the October 10th market closure and yeah, where it's been bouncing around ever since. So it doesn't look too great. Probably not a comparable appetite to when the BTC ETFs first launched. I mean, ETH also was not able to 100% replicate the success of BTC ETFs. Most of the ETH outperformance just came from the DATs buying heavily in summer. So that, I think, is a positive example of them buying on the open market and heavily, let's say, alleviating the price. But yeah, I mean, what is your guys' opinion, like, in terms of maybe also your portfolio allocation between BTC, ETH, and Sol?
So the question was the last part I didn't get. Sorry.
Well, I mean, do you think the Sol ETF is significant, and does that reflect to any extent in your portfolio ratios between BTC, ETH, and Sol?
I'm not looking at the ETF actually. I'm just looking generally at the market cap and adoption. And my biggest position is by far Bitcoin. This has more something to do with Bitcoin being a finished product, being completely established. But yeah, like I would also take into account that I believe that there's like more demand for buying Bitcoin than an altcoin because it's the big daddy of the industry. If you want to have exposure to the crypto industry, the best move you can probably do is Bitcoin if you are like not invested yet, long term. So this is the reason why my biggest position is Bitcoin, and then Solana and Ethereum are more or less equal, more or less. But yeah, I actually like. I mean, like when GSOL was launched, it was like I don't know what it was, but it performed very well. There was like this one. There was this one metric. What was it? I think they had like how much in trading volume here. It wasn't too bad. Like when they launched last week, I think wasn't it 110 million or something? Trading volume, which isn't too bad for day one. I'm just looking for it.
Or what's your take? Are you still like heavily exposed to memes or alts, or mostly in majors?
Same situation, mostly through companies, through equity and company holdings. I think it's mainly like a mix of ETH, BTC, Sol, some other alts. Memes just like a small percentage, but generally like don't trade, don't really like. I mean, it's pretty clear that the market is in a weird place. Many people think it's not over. I'm one of those, and because we didn't have this crazy euphoria bull market, I don't even know what a bear market would look like. Like it's been painful for the last couple of months. So if this was the bull market, then I only can imagine how bad the
Question for
bear
you,
market will be. But jokes aside, I think there's a couple catalysts, right? Like there's still a couple airdrops that we're yet to see. There's a couple big ICOs that we're yet to see on chain. There's allegedly the Pump Fun airdrop, which who knows if it comes, but if it comes, I think it will be big for the trenches. Other than that, like I'm really not concerned with trading or anything like that.
Question for you, Uno, because actually I was thinking about this on the weekend also prior to this to today's episode, like because I was like so sure we would talk about this again. Like this feeling about what a bull or a bear market is, because we also looked at all of the indicators last time, like what could be like some more pull or push scenarios. Are there like any indicators that we reached already, some signals, some top signals? And I'm just really thinking like maybe like I think I think everything seems so weird, and I really question if we were really in a bull market. Like, was this really a bull market? I don't think so. In terms of Bitcoin performance, yes, we saw some capital inflow, but the rest of it, I think there aren't too many metrics that speak for that. And also specifically, all of the soft factors are, in my opinion, speaking against this. First off, the AI activity just reached an all-time high in the industry. We are witnessing that basically the age of consolidation. All of the big crypto companies trying to consolidate, like maybe not the big exchanges, but we see like a lot of M&A activity left and right. And then on the other hand, you see also a lot of people getting laid off as part of that. And if I compare this to 2021, where everyone was just
That's the
saying,
problem.
let's hire 10,000 people and you get whatever salary you want, we are like, let's consolidate the industry and kick everyone out. Like, sorry,
So
that's
I
not a
think
bull market for me.
I think that comparison definitely lags because times have changed. I can definitely tell, like, end of last year, beginning of this year, we were definitely in a bull market.
Yeah.
There's no doubt about that. Like, pump fund fees. It was a Bitcoin and memes cycle, right? Bitcoin, memes, and stables. There's no value capture on stables, but like Bitcoin and memes mooned through the roof. I know people like personally that made 8 figures, cashed out on Fartcoin and stuff like that. So,
question. Of those people you knew, did most of them round trip it? Or
no,
did they actually cash
yeah.
out?
Most of them round tripped it, but some definitely cashed like solid 7 figures on what I just said, like Goat, Fartcoin, AI16Z, Mudang, Peanut. There's been a couple tokens which went to billion or close to a billion, where a lot of people made a lot of money. But I still agree with Yuri. It's super weird. Like, so obviously no one knows what's going on. I think reasoning by analogy is completely useless. It's like, I don't see a lot of similarities to previous cycles. But the one thing that is very clear to me as per why only few things mooned is last cycle there were what, like 20,000 tokens on CoinMarketCap, CoinGecko? This cycle it's 20 million. So it's multiple orders of magnitude more token. So it dilutes like crazy. There's way more professional extraction going on, crime. So to me, it's not a surprise that only like very, very few things moon. But I could also see a scenario where it's so cooked that was it. And we have to, like, before we get a proper news cycle, if we have the cycle dynamics at all.
I mean, what is left to be cleansed of? I mean, everything is down already.
It can always go a little
people.
bit more down.
Yeah, of course. Like, but the cleansing effect of an altcoin that dropped 95% from 1 billion market cap to 50 million, now dropping another 90% from 50 to 5 million. The first 90% is like a 20x more relevant decline. Like the last 90% decline doesn't really cleanse off anything anymore. Like there's way less
strongly
capital
disagree on
being
that.
destroyed.
I strongly disagree on that. I think some areas, and that really comes from a deal of my heart, where we can talk about this like also later when we talk about the functionality rebrand. The one thing that always was like a bad gut feeling when we were like in this bull market or whatever the cycle is. When we left 2022 and we entered 2023, I was like prepared, okay, we experienced Terra, we experienced FTX and all of these things. Now we're in a bear market and we accept that, and bear markets are for building, but still there were like so many projects launching left and right or like raising at insane valuations. And I think there's still too much money in the crypto market for like proper growth that's anchored to real demand drivers, to real innovation. I think that's completely missing. You can, if you just have the right connections in the industry and can spin up a nice narrative, you can look at IP, like Storage Protocol. It's my favorite examples. it's sitting at billions. It does absolutely fucking nothing. Nobody knows if it works. And they now try to build another vehicle around that. Like, sorry, I believe we still need to burn more in order to kind of start from scratch again. If I look at how the industry looked like in 2019, 2020, what kind of players were in there back then compared to now, yeah, I think we can still go down even more, and it wouldn't be a surprise to me, to be very honest.
For
Because
stuff like Story Protocol, I fully agree, because that is still sitting at a like 5 billion or whatever FTB. I mean, for that stuff, absolutely. But like, let's say Arbitrum, Optimism, or Polygon going down another 90% is not going to have as much of an effect as the decline that has already happened until now, because most people are down bad already. If they were to liquidate, they cannot recoup a lot of capital. So I think the industry internal cleansing is less impactful going forward when like inflows or outflows from traditional finance into the industry. So what happens regarding liquidity conditions around crypto is right now more relevant than what happens in crypto. Of course, you cannot separate these things, but like I think within the industry we sometimes neglect that at the end of the day we are still very emergent, and compared to other industries we are very small, so we are extremely dependent on the inflows from other people and like other capital, and we've completely failed to attract such inflows over the past 3 years. Obviously that is also an industry internal problem, because we have to like make industry internal achievements in order to attract outside capital. So there's certainly a relation there. But I mean, if you
no, that there isn't that is, in my view, the relation. Like, if you are like from Wall Street, for example, what would you prefer investing in? Like some magic internet coins or AI,
I
or
would
like
still be pretty interested in Bitcoin. I mean, right now,
yeah,
from a
and
like
Bitcoin Moon.
larger macro perspective, everything is valued at a pretty high level. I mean, gold has had a huge run up. All the indices are trading at an all-time high. You see a lot of kind of recursive capital usage in the AI sector and around data centers. If you are approaching markets with a, let's say, 1 to 2 year time horizon right now, there's not really anything out there that looks that attractive to invest in, because everything has been running super hot. Even though I would say I like to use the phrase when I discuss economics with friends who are like more into the political stuff, that at the end of the day, the economy is not real in most Western nations. And it kind of fits into the entire financial absurdism thesis, which I'm quite a big proponent of. And on the surface, this thesis has not been getting a lot of appreciation, let's say, over the past 6 months, ever since the meme coin cycle was over. I would say 12 to 18 months ago, a lot of people were kind of jumping on that wave with all the meme coins rising, because that was sort of a like proxy expression of financial absurdism. But if you just look at Western nations like us in Germany or people in the US and the structure of these economies, it is insane to me how people, especially in our generation, take the working of this machine for granted. It is absolutely insane to me. Like every single day, and I say that without any sarcasm or irony, is that like I'm genuinely surprised how any of this works. I am genuinely fascinated by it, how any of this still works. If you look at all the debt Ponzinomics, if you look at all the insanely inefficient allocations of capital, the way people optimize for useless consumerism to impress other people. I mean, I come from a like business administration and economics background, so like a lot of the people around me like fit into the whole like finance bro, or like in German the BWL Justus meme. And like even these relatively smart people, the way they allocate their capital into stupid consumerism crap, it is insane. Like how can this economy sustain itself? 80-90% of this consumer sector, it's spent for useless BS. More than half of all white collar jobs in first world countries are, it's just adult daycare. Like this entire thing is poised to collapse. And like you get to a stage where you sort of want to see it burn down, because not because you like dislike the system inherently. I mean, it is what it is. Like I want to impose any moral objective upon markets. I mean, markets just are. They don't follow an explicit moral objective, and like arguably they shouldn't, because we couldn't agree on one. But like if you just look at the mechanism behind it and the sustainability, it is really poised for a reset. And I don't think, if you look at demographics and the growth of government debts, like how is this supposed to go forward? It's an asset-led economy, and that asset-led economy is more and more detached from the real economy. And I think we will get to a stage where this will lead to a lot of like society internal, let's say, yeah, uproar. And I would like to avoid that if possible. Sorry for the rant, guys.
Yeah. It is what it is.
It is what it is. What else do we have today?
Maybe we could briefly discuss Monad and MegaEth. I think out of all the things happening, the only things that get a little bit of attention and interest of capital are the ICOs and the Monad airdrop. So were you guys eligible for Monad?
No. Didn't play around with it.
No, same.
No. I was in talks with some liquid staking solutions for the past couple of weeks, which was quite interesting, but yeah, I mean, Monad had like a lot of traction, and I just hope that they didn't lose it entirely. It seems like, so I'm really strongly against like those people who use an application then expect that they get paid. Like this attitude is like so anti-crypto actually. Like airdrop was promised to me, or like free money was promised to me. It's like so weird.
Yeah, it's
so weird.
You know, we are builders in the space. So we don't just like use the tokens and play around with it. We also build some stuff. But I think like the worst thing you can do is to just like be a neat, buy a token and just hope that it goes up. And then like this type of market sentiment and situation is just gonna kill you. And I also find it weird. Like, yes, I think Murad has some pretty good points, cult and free cult labor and movements. But now it's like every new coin is a movement, and you're like, please shut up. Like, I don't want to hear anything about this coin launched 4 hours ago. Murad is speaking about coins that were launched a year ago and built communities, and they have some lore. So I feel like being a builder and dabbling a little bit with tokens is fun. And then like, you know, you get an airdrop here and there. But I just like don't see why you would do this full time and then have the expectation that the market owes you and that the companies owe you to airdrop. And I don't know. That's still very weird to me. Entitlement.
Yeah, and also like there was like one of I've read that tweet like 4 or 5 years ago, and that's like the one thing that I always tell people when they say they want to hunt an airdrop. The best airdrops come to you when you expect them the least. So for example, the best airdrops that I've gotten were like completely unexpected because I just used some stuff. And I think that's really the meta. Also like maybe like a mantra that's like also valuable in life. If you just try to enforce something with all of your willing power and be super bitter about everything, then I think you won't get rewarded for that. And also I was always super skeptic about these airdrops like Monad, Berachain, and all of the airdrop people had like super high hopes. Like everyone in crypto tried to catch that airdrop. And yeah, so for me, it's not surprising that nothing happened. And it's also, yeah, it's like a weird attitude, as you mentioned, Onur. It's like an airdrop Karen for me. Like, do some proper work. And for me, airdrop hunting is like gambling, you know. I also don't go to a casino and then I go out and say, these motherfuckers, I spent like 5 hours here and I didn't cash anything out.
You don't insult the dealers if you don't walk out profitably?
No, usually I punch them and stuff like that.
You know, another thing that disgusts me really, and I'm gonna die on that hill, is all this casino bullshit. Like, everyone is doing casino streams. Everyone is sending casino links. Like, when did we normalize this? Like, when did we normalize casino streams and casino affiliate links and people getting paid to frickin' shill casinos to gamblers who already are broke so they can completely ruin their lives? I mean, yes, to some extent, crypto has a casino aspect to it, people gambling on coins. But I think in general, there's still much more to it. There's like technology, there's new ways of coordination, there's governance. Like, we're building all these systems. It's not just gambling. Gambling is like, should be like, I mean, it's probably 50% in reality, but it should be like 10, 20% of it, right? I really don't understand why people are being celebrated. Like, even like big KOLs. I mean, everyone knows I hate KOLs, but like some big names and they're all shilling casinos. Even Gainsey shills casinos. And I'm like, what's going on here? Like, this is weird. This shouldn't be normalized.
I think it's a generation thing to some extent. For the generation Yuri and I are in, it's just like I still think there's a lot of truth to the mentality of that old. I think it was from Degen Spartan, like a Telegram message from 2021 or 2022, where he said, after college you have a few years to hyper gamble yourself to wealth, and if you don't manage to do that, you'll be a wage cuck for life. And arguably, you can still engage in careers and whatever you want to do, startups, or may it be consulting or finance or whatever, where you can make a decent living for yourself. But the one positive thing that we have to give to our generation is that there is more awareness and less pretentiousness about the uselessness of most of these careers, most of these firms, and most of the products that they offer. So there's
I
not
think,
a lot of distinction between the meaning of slaving away 80 hours a week doing PowerPoint slides in some
sure.
tower and just like trying to gamble, because at least gambling is fun.
So honestly, I have a problem with generic advice like that, and I beg to differ a little bit because
I'm not giving advice
rather
for anybody
than
to gamble, like not at all, but like I'm just trying to
no,
explain
but
where the mechanism is coming from.
here's a counter example, and I know people who went that path, right? So that sentiment, which I understand where it comes from, but I think so. Here's the problem, right? Like, the sender sends out a message with an intent and with like something they have in mind, but I think people will completely misunderstand the message. People will read this and will say, "My fucking god, I'm gonna YOLO the next 5 years. I'm gonna not work on this hard thing career. I'm just gonna like try to make it and gamble and blah blah blah." I think what he means is something different. What he means is like, build something, work hard for it, be entrepreneurial, like take risk. And take risk can also be within a career. Like, I know people who have better careers as an employee. I mean, most people who take their careers seriously end up better than 99% of entrepreneurs. Like, let's take entrepreneurs. 90% fail. 1% make it big, and the other 9% may have like an okay business that makes like 1-2 million a year. If you have an okay business that makes 1-2 million a year, and you have like 2-3 co-founders, that's what, like 600,000 a year, your cut. You can make more at good careers. Like, I know people with good careers who make $1 million a year, 500,000 equity, 500,000 like cash. Obviously not overnight. They've been working on the career for 10,
Yeah,
15,
but
20 years.
that's 0.03% of the people
probability
in Germany.
distribution of making these
Yeah,
outsized
not Germany.
employee
Yeah,
incomes
also
is
US.
probably even worse than on the entrepreneur side. It's like, I think, and I once listened to a podcast from like tax advisors in Saxony, in Dresden, where I'm coming from. In the entirety of Dresden, I think there were 2 people who made an income of over 1 million. And it's a 500,000 person city. It's like the odds of making big money as an employee is insanely low. Of course, the downside is muted as well. Like, I got to give you that, but it's not. I mean, obviously here in Berlin, in kind of a tech-savvy industry, probably many people we are surrounding us with who are employees are like tech people. So they have very decent salaries. But it's not like Amazon and Google and Microsoft are throwing around these entry-level product manager BS jobs that give you $350K right after college. Like,
Yeah,
these
and
times are over.
That's
And
not
there's
the
like
point.
10 jobs
That's
left.
exactly what I said. But I think the point is, it doesn't matter if you hyper gamble after college or you do the most boring, straightforward path. If you work hard for it and you're smart about it, you will make it. You're gonna make it.
and
Either way.
I just want to throw in something very important, like for the two examples. So one, if you are building a business and you are walking home with more than 100K, then, well, like, big kudos to you, because you were able to find a demand, build something up, carry the risk, eventually hire people carrying the responsibility for it, and go home with like 100K, which is like, even in high industry countries like Germany, which is double the amount of what the middle class is. So already that's like nothing to be played down for, in my view. And the other aspect is, yes, there are also like maybe industries in the US or something where you make these salaries, but also in the cities, the life expenses are insane. I just watched a documentary yesterday about the US and how they are voting for this new mayor who's more on the left side. But I was also shocked to learn that there are like people paying $70,000 to send their children to kindergarten. So even if you make like 300K, like the relation to that 70K for kindergarten and what all of the other things are costing in the US, like, it's melting. So it's like left pocket, right pocket. So just wanted to throw that out there, like,
If you're
to
in
put things
Manhattan and
into
you make
relation.
below 200K a year, you're living like a dog. Like, 200K is no money over there. I mean, similar for London. If you make less than 100,000 pounds in London, you don't have an insanely good life, because everything there is super expensive. And mostly, if you are in a job where you make that kind of money, you are surrounded by people that promote a very like wasteful luxury consumerism lifestyle. And 99% of people will try to live up to these standards of their surroundings. So all of that money essentially goes to waste.
Yeah, but I just wanted to throw that out there, because like I also feel like on crypto Twitter, people like became a little bit brain dead on that and lost touch to relation to the reality outside.
Is 10 million enough to retire?
Yeah, these kinds of memes, or is it enough if I make 200K, bro? Chill. Like, seriously, if you build something up, you build expertise, and you make like 100K per year, be fucking proud of yourself. Like, you are doing better than probably 90% of the people around you talking shit about Twitter. If you have no debts, of course. If you're debt-free, you're making 100K into your fucking pocket, you are very well off. And I just, like, that's something that's really important for me, because like I feel like that people have partially completely lost the touch to reality. Also, like, AI is coming, so a lot of people will have like a super hard time to actually find a job. So
I don't know. I don't buy into this philosophy, because
Which do you think it's overall to like doomerish, or what precisely?
no. This is more on the inspirational end. Look, one of my oversimplified rules in life is, for every area in life, whether it's podcasting or trading or working or athletics, whatever you do, 1% will, like, the 1% will be by orders of magnitude superior and better and more efficient and more successful than the remaining 99%. And it just takes a lot to get to the 1%, right? So saying you're doing fine is fine, but if you want to get to the 1%, I would say you have to work really fucking hard, and you can't be too content with where you are. You have to like push harder. I'm not advocating for that being like a good life strategy for happiness or anything. I'm just saying, like, if you want to make it big, I don't think. Anyways, it's not important. I'm just
saying, I'm just saying, if you're like already like out of that, I became an entrepreneur, I built a business, it's working, it's running, and I made like 100K. That's like nothing to be like, the super small guy, I'm ashamed of myself. It's, you already did something, be proud of that, and
sure.
you can still do a couple of steps from there, right? And you probably learned a shit ton of things along the way.
Yeah, this discussion is what happens when people are disappointed with their monad allocation. Now, funnily enough, I got a little bit because I used to participate in some early rounds in Legion, and many of the Legion investors and their whitelisted wallets got a monad allocation. Like I never interacted with monad or the monad testnet before, but yeah, I think it's it's definitely a good way to filter out people who are kind of deep in the trenches of the crypto ecosystem at large. I'm not that opinionated if the monad airdrop is structured in a way that it will lead to like long-lasting engagement in their own ecosystem. I think just also partly due to the market conditions, everybody is going to sell it off over the first few days or like trying to hedge it. I don't think that they had any path where they could have made everybody happy. Maybe to briefly cover the MegaEth ICO. So I think maybe we covered it last week when it started, but I think it closed Thursday or Friday. I think Friday last week, and it was like 25 or 20x oversubscribed. So way more capital commitments than the 50 million raise cap, and it's very emblematic of the current state of markets that all the interest and also commitment of capital that is still out there is used to bid these new shiny things, and everybody has consolidated around the philosophy. Okay, I think it came from MGNR, the guy. I think he disappeared once, and when he came back, it was like a liquid fund back in the 2021, 2022 days. And his philosophy was that in this industry, you basically have 5 to 6 times a year where there's free money on the street and you have to pick it up, and you kind of have to sit still on your feet for all the rest of the time. And I think back then in 2021, 2022, it was a lot more frequently than 5 times a year. If we look back at how easily you could have made money by just holding some stupid altcoins back then. But in 2025, he's certainly right. You should have only participated during like extreme dips and points of fear during like April or a few weeks ago during October 10th, and participated in a few of these ICOs. So everybody has consolidated around the philosophy. You deploy capital a few times a year, and then you just try to exit and extract as soon as possible as you're able to lock in some profits. And I think as long as this philosophy prevails, we will not see a widespread alt season because there's no marginal bidder coming in.
Strongly agree on that.
I don't think we will see a widespread alt season ever again.
Yeah.
What does that even mean?
Agree.
Like, we have 20, 30 million coins. Where should the capital flow?
No, but I mean, obviously, of these 20 million coins, 90 million, 900,000, 99,000 are off like the field of attention by any means. Of course, there's some dilutive effect, but it's not like we 10,000x'd the dilution. We probably realistically 10x'd or 20x'd the dilution of like introducing more coins that some people perceive as relevant to deploy capital into. But even that 10x or 20x dilution obviously wreaks a ton of havoc if you don't compensate that dilution through new inflows of capital. And we have not seen any new inflows of capital into the industry over the past 2 to 3 years, except into majors through DATs and ETFs. I mean, Bitcoin has performed very well. And I think throughout the book, maybe if you leave aside some like USD denominated DeFi farmers or perpetrators, most of the people would have done way better by just holding BTC. And if you look at last cycle, especially during the 4th year of the cycle, that was completely different back then. Like it was easy mode if you were exposed to alts. Of course, you had to like sell right in time to not round trip all of it, but there was a sustained period of time of several weeks up to several months where altcoins significantly outperformed. And we have not seen it this year at all, by any means. It used to make a lot of sense last cycle to be diversified into different sectors and within these sectors hold like maybe 2 to 3 bets, because
Yeah.
there was a likelihood that you would miss the 20x runner. But like out of all the relevant altcoins, probably like every fifth altcoin was like a crazy outperformer, and you wanted to be exposed to that. Now, out of the 10,000 altcoins, maybe 100 or 50 or maybe even 5 altcoins are running. So the probabilities of, by just like, diversifying across 20 positions in your portfolio, the odds of hitting that very singular outlier to the upside have drastically decreased. So on average, like all your alt positions are going down, and the likelihood of you being exposed to that one runner is incredibly low. So like everybody who was overexposed to alts, and I mean, past cycle, it made sense to be overexposed alts in the fourth year, are now completely down the gutter. And I think there's a very, very tough path to recovery, if at all. Like these people don't have a lot of capital they make through like a normal job they can put into the markets, or like try to DCA down. Most of the altcoins they're holding, they don't really have any catalysts coming up or any path to recovery due to unlocks, due to the projects being dead and just like trying to sustain themselves. Yeah, I think it's looking pretty bad on the longer tail of alts.
I think you made a good distinction at some point, which I think people don't appreciate enough, which is BTCD and an altcoin cycle, I think, are two completely different things. And I think we will see BTCD go down to 50, maybe even 40% in the future. But I think the notion of an alt cycle and what that means is dead. It's a subtle difference, but I think it's important. And you exactly made the right point. Like, it's impossible to bet on the right runner. So how are you planning to get exposure to BTCD falling, essentially, right? You might as well bet on shorting BTCD on a prediction market. It's the same thing.
Yeah, I mean, on the if you want to get exposure on BTCD falling, your most relevant bet is still Ethereum. If you look at the BTCD chart, the like 1 to 2 weeks where it fell from 66% down to 60% in July, that was during the time of severe ETH outperformance, because like Ethereum is still by a wide margin the second most relevant coin. I mean, the price performance of Solana and of BNB and of XRP are probably only combined as relevant as the price performance of ETH. So BTCD is still largely influenced by the performance between ETH and BTC. But of course, the large multiples you want to capture are not in Ethereum, because Ethereum is already a 400 billion, 500 billion, whatever coin. So if you want to bet on the insane multiples, you have to be somewhere in the, let's say, 50 million market cap, 100 million market cap, and gamble on that to run to 1 billion or 2 billion. And something running one singular runner from 50 million to 1 billion has zero effect on BTCD. So I think in that sense, you are very correct that the singular alt outperformance is not really correlated with BTCD. Of course, there was this theory in the past where you had that kind of that flow chart of like capital flowing into BTC, then into ETH, then into large scale alts, then like into low cap alts. But I mean, it just has not repeated. Also back in 2022 and 2023, I still remembered that like around every new month starting or around every new quarter starting, there were all of these crypto Twitter personalities who wrote threads about this quarter will be dominated by these 5 main narratives. And then they listed like AI X crypto or like RWA infrastructure. And then they were listing these coins that fit into all of these narratives. We have not seen any of these narratives outperforming for more than a year. Like the last narrative driven cycle was the AI agent one around a year ago. And that lasted for 4 weeks, and then the party was over. Before that, we had meme coins in October, November 2024, but like for a year, these narrative or like mini sector centric outperformance phases have been completely dead. Like there's, I mean, kind of ironically, we launched this podcast more than half a year ago with the name Odyssey Believe in Something, but we have now entered a state where nobody is believing in anything anymore. and you cannot really criticize people for that. Like, what do you want to still believe in this industry? Maybe besides for BTC, and if you're active in the darknet, maybe believe into Monero and Zcash or whatever. And I mean, even the Zcash chart is just like being crimed up.
Yeah, hard times.
I think we're at the hour. I think we should wrap up. I actually also need to run, do some family business, but I know we have a couple more topics planned, but maybe we can go through them next time.
Yeah. Was a good session though.
Was a good
Thanks,
session.
everyone.
Thanks, everyone.
See you guys.
Ciao, ciao.